ready for the exponential machine intelligence megatrend? Well, in this series of videos I present my top 10 AI stocks to invest in to profit from the exponential machine intelligence megatrend. Firstly, for a primer, do check out my two earlier videos, with the first illustrating why everything will start to change exponentially during 2022. And the second video explains how to invest in machine intelligence stocks in terms of accumulating positions and limiting risk. So my top 10 AI stocks are ranked in terms of risk versus reward and volatility. And I consider my top 5 AI stocks as primary, then the next 3 as secondary, and the last 2 as far more risky tertiary stocks. Whilst do remember that when investing in the stock market, your capital is at risk, so there are no sure bets. The stocks analysis will be presented in reverse order, i.e. the 10th stock on my list is my first video, as this analysis has first been made available to patrons who support my work. So for immediate first access to all of my analysis and trend forecasts, do consider becoming a patron by supporting my work for just $3 per month. And the 5th stock on my top 10 list is Apple. The Apple stock price only really came alive after the financial crisis with its series of pocket supercomputers, the iPhones, since which time it's been off to the races. For those who bought Apple stock during 2009 will today be sitting on a tenfold increase before dividends, which illustrates just how far Apple has come from a company that was a small computer gadgets company on the brink of collapse or being swallowed up by a larger corporation. In fact, Apple was saved by Bill Gates' Microsoft during the late 1990s from the brink of bankruptcy with a £150 million investment, which Microsoft sold before the Apple stock price took off. Apple under Steve Jobs successfully reinvented itself as a highly successful pocket supercomputer corporation, even if personally I think the iPhones on a price performance basis are inferior to, for instance, the Samsung Galaxy range. Apple's financials show that Apple appears to be loaded with a lot of debt, despite having a large cash mountain. Net income is good, as is the PE ratio, while sales growth has been slowing, which means that Apple may be heading for a rough patch, a case of battening down the hatches for a year or so. On the flip side, Apple does pay a small dividend that tends to increase most years. Trend analysis. The Apple stock price tracks the S&P quite closely in terms of trend. Recent price action has been one of underperformance, which is reflective of the general nature of the overly saturated smartphones market, which is likely to persist. The stock is volatile, having fallen 40% from its 2018 high of $230 to a low of $140 before recovering to $190. So do expect greater volatility when investing in Apple. Long-term investing. Even after its recent sell-off, Apple is up 73% over the past 3 years, and as I mentioned earlier, up tenfold over the past 10 years. So definitely worth investing for the long run if you can stomach the volatility. And in conclusion, Apple is definitely another good AI machine intelligence megatrend investing stock to hold, as long as one is prepared for a potential roller coaster ride that could see gaps of as much as 40% between peaks and troughs, as we have witnessed over the past few months. Again, this whole analysis was first made available to patrons who support my work. So for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $3 per month, and ensure you're subscribed to this YouTube channel for the next video in this AI stock investing series.